This is a special update from USA Secure Benefits on the recent developments affecting Social Security recipients across the nation, particularly in January 2026, as we delve into the specifics of deposit schedules, adjustments, and related financial implications that have led to widespread confusion among beneficiaries. This week, we have received reports of multiple instances where individuals have encountered unexpected changes in their payment timings, resulting in potential hardships for those relying on these funds for essential expenses. The core issue revolves around the Social Security Administration's implementation of deposit date modifications, which are directly linked to a recipient's birth date and the original filing date for benefits for those born between the 1st and 10th of any month. Deposits are scheduled for the second Wednesday of the month, while individuals born between the 11th and 20th receive theirs on the third Wednesday, and those born from the 21st to the 31st on the fourth Wednesday. However, there are notable exceptions that have contributed to the current misunderstandings, including cases where benefits began before May 1997, or when recipients are eligible for both Social Security and supplemental security income. In such scenarios, payments are fixed on the third of each month without regard to the birth date rule. This distinction is critical as it affects a significant portion of beneficiaries and has led to discrepancies in expected deposit dates, especially in months like January, where holiday schedules further complicate matters. Adding to the urgency of this update is the cost of living adjustment announced for 2026, which stands at 2.8%. This increment, while modest, translates to an average increase from $2,015 per month to $2,071 per month, representing an additional $56 for the typical retirement benefit recipient. Although this adjustment may not substantially alleviate economic pressures in the current climate, it remains essential for beneficiaries to anticipate this change in their monthly income to maintain financial stability. Moreover, for those receiving supplemental security income, the January payment was disbursed on December 31st of 2025 due to the federal holiday on January 1st, which prevents processing on non-business days. This early release, while intended to ensure timely access to funds, has inadvertently caused some recipients to misinterpret it as an extra or bonus payment, leading to overspending and subsequent shortfalls. When no additional deposit arrives in early January, as anticipated, this pattern has been observed in numerous cases where individuals allocated these funds towards end-of-year expenses, such as holiday gifts, only to face immediate challenges with recurring bills like rent in the new month, underscoring the need for clearer communication from the administration regarding the nature of these advanced payments. Turning to regular Social Security retirement and disability benefits, the birth date-based schedule applies to the majority of recipients with specific dates in January 2026, being January 14th for the first group, January 21st for the second, and January 28th for the third. These dates are non-negotiable and cannot be altered upon request, emphasizing the importance of personal awareness of one's category to avoid budgeting errors. Additionally, for those who commenced benefits prior to May 1997, or qualify under other exceptions, such as combined benefits or state-handled Medicare premiums, the third of the month remains the standard with adjustments for weekends or holidays. For instance, in January 2026, this group received payments on January 2nd due to the holiday alignment. Further complicating matters are the earnings limits for beneficiaries who continue to work while under full retirement age. For the year 2026, the threshold for those under full retirement age throughout the year is set at $24,480, an increase from $23,400 in 2025. Exceeding this limit triggers a withholding of $1 in benefits for every $2 earned above it. For example, earning $33,000 would result in an overage of $8,920, leading to a withholding of approximately $4,460 spread across the years. Payments for individuals approaching full retirement age in 2026. A higher limit of $65,160 applies prior to that milestone, with a less stringent withholding rate of $1 for every $3 over the limit. Importantly, once full retirement age is reached, no earnings restrictions apply, allowing unlimited income without benefit reductions. However, accurate reporting of estimated earnings is paramount, as discrepancies can lead to overpayments and subsequent withholdings from future benefits, potentially disrupting monthly income for extended periods, a lesser-known provision. The first-year rule or monthly earnings test offers relief for those retiring mid-year by evaluating post-retirement monthly earnings separately. If these fall below $2,040 per month, benefits can be disbursed for those periods, irrespective of earlier annual earnings, provided proper reporting occurs. This mechanism is particularly beneficial for mid-year retirees, but requires proactive disclosure to the administration to invoke it for self-employed individuals under full retirement age. Additional criteria apply beyond mere earnings, including hours worked in the business. Substantial self-employment is defined as more than 45 hours per month or 15 to 45 hours in skilled occupations, potentially leading to benefit withholdings even with modest income levels. This has resulted in unexpected financial setbacks for some, as illustrated by cases where consulting ventures led to several months of suspended payments due to unrecognized rules, highlighting the complexity of self-employment regulations within the system. Beyond retiree concerns, the Social Security wage base for 2026 has risen to $184,500, up $8,400 from the previous year. This affects higher earners by subjecting a larger portion of income to the 6.2% tax rate, culminating in maximum individual contributions of $11,439, matched by employers. While this bolsters future benefit calculations, it imposes immediate tax burdens on affected workers and signals ongoing adjustments to the program's funding structure. To ensure long-term viability, recipients are strongly advised to review their annual Social Security statements accessible via the My Social Security online portal at SSA.gov, as errors in earnings records can significantly impact lifetime benefits, which are computed from the highest 35 years of earnings. Uncorrected discrepancies from past years, such as misreported wages, can lead to substantial shortfalls and require supporting documentation like W-2 forms or tax returns for resolution, with delays in correction becoming more challenging over time. Furthermore, federal mandates require electronic payment methods for benefits, eliminating paper checks, except in rare cases like certain institutional or international residences. Most opt for direct deposit or debit cards. But changes to banking details must be processed well in advance, ideally a month prior, to avoid delays in fund availability, as seen in recent instances, where December updates disrupted January receipts. In the event of missing payments, initial verification with one's bank is recommended, allowing up to 3 business days for posting before contacting the administration via their helpline at 1-800-772-1213 or local offices where early arrival or appointments may expedite assistance. This update from USA Secure Benefits also addresses the broader communication shortcomings within the Social Security framework, despite mailed notices in late November 2025 regarding the cost of living adjustment and online availability. Many beneficiaries overlook or do not receive these alerts, leading to surprises with altered payment amounts or schedules. Similarly, announcements about the advanced supplemental security income disbursement were issued, but failed to reach all parties, resulting in the current wave of inquiries and financial strains. To mitigate such issues, proactive measures are essential, including establishing and regularly monitoring a My Social Security account, thoroughly reviewing all correspondence, understanding personalized payment schedules based on birth date, filing history, and other factors, adhering to earnings reporting requirements if applicable, and maintaining updated contact and banking information with the administration, as these elements directly influence benefit delivery and accuracy. In summary, the intricacies of the Social Security system demand individual vigilance to safeguard one's entitlements, given its role as a primary retirement income source for many Americans. Misconceptions or oversights can yield costly consequences. And while the administration strives to administer these programs, the onus falls on beneficiaries to navigate the rules effectively, particularly amid January's unique scheduling dynamics and annual adjustments, as reported in this detailed overview from USA Secure Benefits. We encourage all recipients to take immediate steps to verify their status and prepare accordingly to prevent avoidable disruptions in the months ahead. This concludes our in-depth examination of the current Social Security landscape, emphasizing the need for informed engagement with the system to secure the benefits earned through years of contributions. Now let us revisit the key elements in greater detail to ensure comprehensive understanding, starting with the deposit modifications that have sparked this discussion. The birth date tiered system, implemented by the Social Security Administration, aims to stagger payments for operational efficiency, but its rigidity often catches newcomers off guard. For example, those in the 1st to 10th birth date range must plan around the second Wednesday, which fell on January 14th in 2026, potentially delaying funds compared to prior expectations. Similarly, the 3rd and 4th Wednesday slots on January 21st and 28th respectively require adjusted budgeting to align with these mid-to-month arrivals. Exceptions for pre-May 1997 starters or dual benefit holders revert to the 3rd of the month with holiday shifts like the January 2nd payout this year, adding another layer of variability that necessitates calendar checks. To avoid miscalculations, compounding this is the 2.8% cost of living adjustment, which, though incremental at $56 for average benefits, represents a tangible boost that must be factored into financial planning, yet its insufficiency amid rising costs underscores broader economic challenges faced by retirees. The early December 31st release of January Supplemental Security Income Payments, intended as a safeguard against holiday delays, has instead fostered misperceptions of surplus funds, leading to premature expenditures and ensuing deficits, as evidenced by accounts of individuals using these for seasonal outlays, only to confront January obligations without replenishment. This highlights a critical educational gap in distinguishing advanced payments from extras, urging greater emphasis on fiscal restraint upon receipt for standard benefits. The immutable birth date rules preclude any customization, reinforcing the imperative for personal schedule mastery, while earnings thresholds demand meticulous tracking to evade penalties, with the $24,480 limit for full-year underagers and $65,160 for those nearing retirement age. The withholding formulas, 1 for 2 and 1 for 3 respectively, can erode benefits substantially if breached without prior estimation. Adjustments, failure to update earnings projections, risks overpayment recoupment through future deductions, a scenario that has left some without monthly support for periods. The first-year rules monthly focus post-retirement offers a lifeline for partial-year workers, but its application hinges on accurate reporting to activate for self-employed. The hours-based substantial employment test introduces non-monetary criteria that can trigger suspensions, irrespective of low profits, as seen in cases involving 30-hour weeks in consulting, yielding 6-month withholdings. This complexity amplifies the need for specialized guidance in such scenarios. The elevated wage base at $184,500 impacts payroll taxes for upper earners at 6.2%, yielding higher contributions that promise enhanced future payouts but strain current finances. Annual statement reviews via SSDI are vital to detect and rectify earnings discrepancies, preserving the integrity of the 35-year benefit formula with evidentiary support, essential for amendments. Electronic payment mandates streamline delivery but demand timely updates to avert glitches in transitions, with bank confirmations advised before escalating to administrative channels where persistence may be required given high volumes. Communication lapses, such as underutilized notices, exacerbate confusions around adjustments and shifts, prompting calls for beneficiary proactivity in account management and information upkeep to harness the system's full potential as a retirement cornerstone. This reiterated analysis from USA Secure Benefits serves to empower recipients with the knowledge to navigate January's peculiarities and beyond, ensuring every entitled dollar is received punctually and without undue complication through diligent oversight and informed action.